Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. Well, we're getting awfully close to the top of the stock market. Stock market's had a great run up since October, and now we're getting closer to the top. But now everybody's excited up here because we've broken out to new record highs. Everybody thinks we're going higher. The Moon Boys think we're going higher. I don't see it that way. I see us at a top, very close to a top, and I think we'll be topping out probably next week would be my guess. They may push it up a little higher. Maybe we just move sideways, but when the Fed announcement comes out next week, I think that's pretty much going to be it. Maybe we even sell off going into that week, but then the market, in my view, is going to be coming down. You see, the HYG is struggling, right? There's a divergence between the HYG, which has not made a new high, and the S&P keeps making new highs, right? But the HYG is not falling. HYG is the junk. That's the junk bonds, right? And if they can't pull the junk bonds up, you're going to have these zombie companies going out of business. And that's just bad investments, right? The bonds really are the telling factor here. And junk bonds in particular, but the regular bonds also. The regular bonds will tell us if this is a short-term top where we come down maybe 10, 15%, and then we bounce back up and try to make a higher high. That's a possibility, but I do think we're going to get at least a 10% drop coming up relatively shortly, and it may be a lot bigger. If the bonds start to fall apart, that's where you get the bigger drop, the 20, 30, 40%. When the bonds fall apart. You see, the bonds are the new subprime. The bonds are kind of like the subprime mess of 2008. The bonds are really the subprime loans now. It's kind of funny to think about, right? You see, a lot of people, well, they don't understand how we got into the mess. Now, most people, they have no clue that the Fed created this problem for us by keeping interest rates at 0% for 14 years. You keep interest rates at 0% for 14 years and you hand out free money to all the corporations, you're going to have a problem. And we're going to talk a little bit more about that problem here. That problem is, it's a big problem. It's created ridiculous bubbles in the stock market. Stock market's incredibly overvalued, and you can tell it's a bubble. Just the Buffett indicator alone will tell you that it's got to come down by 50% just to get to the long-term moving average. All right. And the housing market, we all know that the housing market's in a bubble. Well, not the Moon Boys and not in your area. There's no bubble there, but it's pretty much in a bubble when only 15% of the population can afford the average price home. So that's kind of a bubble also. And this is all caused by cheap money, by free money, if you will. Now, a lot of people don't understand that, and that's why they don't understand what's actually going to be coming. A lot of people have no clue what's going to hit the United States. It's already hitting in a lot of places in the world. China, for example, is already in that downtrend. I expect their property values to drop by at least 50%. Sweden already down 30% on their houses. And you got Germany and London, which are already dropped to pre-pandemic levels. Pre-pandemic levels. Now, we drop to pre-pandemic levels, well, that'll be at least a 40% drop. But people say, but Mike, that's impossible. We're never going to go back to pre-pandemic levels. Look at where I live, San Jose, California. We're down somewhere between 10 and 20%, depending on the area of San Jose, but we haven't even hit the recession yet. Toronto, Canada. Toronto's already down 20%, but it could never happen in the United States. We're powerful, Mike. We have the reserve currency. We have the Federal Reserve. They're going to come out and they're going to continue to print money. Now, it's possible we go back to 0% interest rate policy. It's a possibility, right? But this is what got us into the mess. All right, a lot of people, they blame BlackRock. They blame the Blackstones. Okay, now these companies, they were around in 2008, and they lost a lot of money there in 2008, and when they had to get out of the housing market then, and they're going to have to get out of the housing market again. Well, why? Well, maybe the government comes and passes that law where they force them out, right? But it's not really their fault. Look at the Federal Reserve gave Blackstone, gave BlackRock, gave all these corporations money for free. free money. So they didn't have anywhere to put the money. They looked at the housing market and say, well, at least we can go out and buy these homes, rent them out, and get 4 or 5% return. Now, everybody thinks if house prices drop, that BlackRocks and Blackstones are going to buy up the properties. They're really not. You see, they can get 4 or 5% on their money now just in bonds, right? In bonds. And I expect bonds to actually be going up. Everybody else says they're going to come back to 0%. And maybe they do. And that'll create even a bigger bubble. But here's the thing. If they bring bonds back to 0% and they continue to print money, what you got then is money creation, but you don't have any economic growth. Right now, we're printing about $6 for every dollar of economic growth that we get. We print 6 and we get $1 of economic growth. Now, just in the last 2 years, we had to print, what, $8 trillion just to keep the stock market at the same level? I mean, we're the same level we were 2 years ago, but yet we printed $6 trillion, $8 trillion, right? So when you print all the money and you're not getting economic growth, what's really happening to the money? Well, the money stops moving. It stops circulating. It's called the velocity of money. It's how quickly it gets exchanged between businesses, between people, how quickly the money turns over. And as we create the money with no economic growth, means that there's no velocity of the money. It's just sitting in Jeff Bezos' bank account or Warren Buffett's bank account. I'm not picking on them. A lot of wealthy people have too much money and they don't know where to put it. So it stops moving around, right? It stops circulating. Every time this happens where you have the drop in velocity, it results in basically a financial crisis. And that's what we're starting to see right now. We're starting to see a liquidity crisis in the banking system. There's a liquidity problem. They're not making loans, commercial loans, and it's getting tougher to even get a mortgage to buy houses now. It's starting to tighten up. It's starting to get really tight in a liquidity crisis, right? But everybody goes, but Mike, houses prices can't come down. Look, if there's a liquidity crisis, if there's a banking crisis, if the stock market comes down 50%, your houses are not going to stay up. Now, granted, that may be the effect of the downfall of houses as a economy, where before the downfall of houses were the cause of the bad economy back in the subprime day, right? But most people don't understand. They have no clue. They think that BlackRock and Blackstone, that they're really the villains. And they have something to do with it. I'm not letting them off the hook. But the real villain is the Federal Reserve. They just keep giving free money to the corporation. They don't give me and you free money, but they're handing out the cheap money to corporations. Corporations have nowhere to put it, right? They keep printing money. They go back to 0% interest rates. This is going to be a problem. This is going to cause everything to come crashing down. It's basically bad investments. Look at BlackRock and Blackstone buying up all the houses is a bad investment. They will be getting out of these investments because they will realize that they can make better investments with their money other places. They're already starting to get out. They're net sellers now. They're not net buyers. And you get the people like the Airbnb people, right? They're starting to run for the exits. They're starting to get out of the market. These are bad investments. And that's what happens when you keep interest rates artificially low. Now, how'd they do this? Well, let's think about it. I don't think that mortgages should have ever been down at 2.8%. I know you got yours and you're locked into your forever home and you're going to stay there until you die. And that's cool. Nothing wrong with that. But you see, when you're locked in like that, you can't upgrade. You can't increase your lifestyle. You're staying in that home. But the reason that they were down at 2.8% was the Federal Reserve got in the game. You got to keep the Federal Reserve out of the game. You got to keep them out of the game, right? What'd they do? They bought $3 trillion of mortgages, $3 trillion of mortgages. So all these 2.8 mortgages and interest rates were bought by the Federal Reserve. You see, back when the Federal Reserve was first originated, they weren't allowed to buy mortgages. No, they weren't. They weren't allowed to buy bonds. No, they weren't. Now they have 8 or 9 trillion. That's just on their books. They're already buying stocks. People say, no, Mike, they're not buying stocks. They are. They have a trading desk. They have a plunge protection team. You can Google it. Plunge protection team. Google Fed trading desk. These are real things. People think I make this stuff up just because I want to entertain you. No, I love talking about this. It's funny. It's funny. I get a lot of haters out there. I mean, it's like you can't even have a rational conversation anymore. I know it's just my take that the housing market's going to go down by 40%. Everybody believes that's not possible. That's just my take. Look at it's possible. They double the house price, triple the house price. They can do it. They can do it. It's called hyperinflation. Hyperinflation. But what will be sacrificed at that point? It would be the dollar, right? It would be the dollar. You would go into the grocery store and that loaf of bread would be $50 instead of the $5 or $10 it is now, right? The dollar would be sacrificed to make the houses go higher. Could they do it? Absolutely, they could do it. It's called hyperinflation. A lot of countries have this. But you see, the dollar is going to be the one that goes down. The dollar is the one that's going to pay the price. It's going to be sacrificed. Now, the dollar might look strong against, well, let's say the Mexican peso, maybe the Brazilian real, maybe the Chinese yuan. It'll look strong against other currencies, but when you go to the grocery store, it's going to look awfully weak. It's going to look awfully weak against gold. Gold at $2,000 an ounce. It's close to a record high, right? But it's very cheap. Look, you got the Dow 38,000 right now on the Dow, 38,000, right? You got gold at 2,000. That's a 19-to-1 ratio. Now, it's going to happen where they come back to 1-to-1. Is gold going to shoot up to 38,000? Probably not. Is the Dow going to come down to 2,000? Probably not. They're going to meet somewhere in the middle. Now, it's happened 2 times before, just in the, it happened in 1932, happened in 1982, about every 50 years. Where are we right now? About 50 years out. It's going to start to happen. Now, is it going to happen tomorrow? Probably not. But it could. It could. You don't know. You don't know when the reset is planned. And there will be a reset. They're going to reset it to the central bank digital currency. You see, the dollar is losing all of its purchasing power. They don't want you to know this, but look at, you got a new starter home right now. What's it going? I don't know. I mean, I know it's less than it, but let's just call it $500,000 for a new starter home in the United States. The average price starter home, I mean, it's really around, I don't know, $430 or something. But it's up there. It's up there. It was up at $490, right? It's dropped down by about 15%. Anyway, so $500,000 for the new starter home. Well, let's say you want to buy a new truck. A new truck, you go down to the Ford place, man, it's $100,000 for the Ford F-150. Really, $100,000? That doesn't even get you all the options. You see that they're demolishing our currency is what's happening. They're demolishing it. And it's sad to see the direction our country's going. I mean, where I'm at, I got homeless people everywhere. Crime people everywhere. I mean, it almost, I don't think we're going in the right direction. This is just my take. I know a lot of the moon boys and a lot of the young people think that everything's great because they don't understand what's coming. Yes, everything is great right now. These are the good times. But if you can't see how direction we're going, if you can't see that they're going to print money into oblivion, if you can't see that they're going to print so much money that there's no amount of dollar bills that will get you a 1-ounce gold coin, if you can't see that, I might not be able to help you. I don't know. But anyways, maybe I'm not the right channel for you. Look, I get a lot of people out there and they just tell me how crazy I am, and I'm so okay. I'm not asking you to believe me. I'm happy you're listening to me, but listen to other people. Go listen to Dave Ramsey. That guy, he loves houses, right? He's going to tell you that house is going to double. Maybe he's a moon boy. I don't really know. He might be. Barbara Cochran, she's probably a moon girl. Who knows? But she's going to tell you that real estate's the best buy right now. Look, I love real estate. I make all my money from real estate. I don't want gold to go to $20,000 an ounce because I know what the world will look like when that happens. I don't want house prices to crash by 50%. I make my money selling houses. I hope they double. I hope they triple. That means my income will double and triple. Wouldn't that be great? I'd love that. But the reality is nobody can afford them here. Everybody thinks, but Mike, your channel's been around for a couple years now, and you're just gloom and doom every day. I'm not gloom and doom. I'm telling you, there's going to be great great opportunities coming for those who are prepared, for those who are holding on to cash, for those who are holding on to gold and silver. There's going to be great opportunities. I'm just saying it is the most unaffordable time in the history of the world to go out and buy a house right now. Can you do it? Absolutely. I'll sell you one. I don't want prices to go down. I just have seen this movie before. There's an article that came out anyways the other day, and it says that they need more young people to come in and revive the housing market. We're going to have a housing market revival. Praise the Lord. I mean, that's great, you know. Let's get the young people, because they're not smart enough to have seen this movie before. They don't want the old people. We've seen the movie. We know how it plays out. Anyways, if you like this stuff, give me a thumbs up. Why not? I'm Tall Mike. Punch that subscribe button. Get out there, everybody. Enjoy the day. Bye-bye now.